What's up, everybody? The Citadel is warning that treasury buybacks could weaken the dollar and push the inflation higher. I actually think that's a very real risk, and people are way too quick to label this, oh, new liquidity, that's bullish. And yes, buybacks can reduce the stress in the treasury market, but also yes, a weaker dollar is usually supportive for BTC and risk assets. But if that weaker dollar starts feeding back into inflation, the whole setup changes, because then the Fed has less room to cut, long-end yields can stay elevated, and suddenly the same policy that helped markets in the short term becomes a problem later. So my view is pretty clear. Short term, this can be bullish for Bitcoin. Medium term, it can be ugly quite fast if the inflation re-accelerates. And that's exactly the part that CT keeps ignoring. You can support the bond market, you can ease financial conditions, you can weaken the dollar, but you cannot pretend there are no consequences. If inflation comes back, the liquidity trades turns into a policy trap. And in my view, that's the real risk here. Bullish first, dangerous later. What is your take? Let me know in the comments below.